All right, so I want to say happy independence to everyone. Welcome to the month of October also. The year just remains exactly 3 months to end. So December is around the corner. Uh, please let's mute our devices.
Happy Independence and Happy New Year.
You know, see my
Yes, happy
happy
independence.
I say you know. I see you.
A happy new month.
Yeah, happy new month to you, ma, and to everyone.
Thank you, sir. You're welcome, sir.
All right, so let's quickly look at what we have this afternoon. And this afternoon we have it's purely fundamentals, though I'll give you insight into some technicals I might work later on in the day. But for now, the focus is the fundamentals. Now, by 2:45 p.m., which is roughly like 2 hours from now, we're going to have the final manufacturing PMI from the United States. And by 3 p.m., there'll be ISM manufacturing PMI, JOLTS job opening, and ISM manufacturing prices. So we have 4 events because the one for 2:45 and 3 p.m. is just 15 minutes interval. So the effect can still spill over to the 3 p.m. event. The 3 p.m. event is actually going to be much more impactful because we're having 3 events happening simultaneously. So we have 4 events to look at on the dollar this afternoon. Now we'll look briefly at each of these and the potential direction that we're expecting. Now, for the final manufacturing PMI, this measures the level of a diffusion index based on surveyed purchasing managers in the manufacturing industry, and actual greater than forecast is good for the currency. For ISM manufacturing PMI is the level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. Again, actual greater than forecast is good for the currency. For JOLT job openings, is the number of job openings during the reported month, excluding the farming industry. And again, actual greater than forecast is good for the currency. And for ISM manufacturing prices, is the level of a diffusion index based on surveyed purchasing managers in the manufacturing industry. Actual greater than forecast is good for the currency. So all of them, the effect for all is actual greater than forecast is good for the currency. So if by 2:45 p.m., the data is released from the United States and the actual is greater than forecast for the for the final manufacturing PMI, then the data will be in color green. And at that instant, we might be looking at buying the dollar. And if on the other hand, it's a color red, that means actual less than forecast, we may be looking at selling the dollar. Now, for the other 3 events, the best scenario will be if you have actual greater than forecast for all of them, that will lead to a massive bullish movement on the dollar. And if the data again is actual less than forecast and it cuts across all, then we'll have a massive bearish outlook. Now, these are the 2 best scenarios we're looking at for all these events. Actual greater than forecast will buy, actual less than forecast will sell. Now, for the other ones, that's the one by 3 p.m. Now, because some of them are not really related directly, like we have ISM manufacturing PMI, ISM manufacturing prices, those two looks a bit related, but the job openings does not correlate in any way to those other two. So it's possible to have maybe this one can end up being a green while the others turn out to be a red. That is a possible scenario, and that can lead to spikes in the market. So I'm just saying this so that we can take note in case the data comes out and is not as expected. If you have the data conflicting whilst one is buying, the other is selling, the best to do in such instance is just to stay out. So a green for buy, a red for sell. So that's what I can tell you on the fundamentals. I'm flipping now to the chart so that we have a look at what the technicals have in stock for us. Now, on the technical side, the dollar generally at this moment is not really in the decisive state. Let me put it that way, because we don't really have the dollar at a sharp level where we can say categorically that this is what we're expecting. Now, this is the dollar index. The dollar index on the daily, let's start from the weekly time frame. Price is already in motion. It has already left the support level. Let me check again. Okay, there's a previous support zone from the monthly time frame, which is reflected on both the daily and the weekly. So price has left this, it will have been a very good thing if price is still at this support level, but currently price is already in motion. So what happens is that whatever the market brings, that's how we're going to trade it. If it comes out actual greater than forecast, we'll buy. If it comes out actual less than forecast, we sell. But the bullish motion is already on. So let's just bear that in mind. Now, for USD CHF, we can clearly see that price has left the support zone also and is hanging in between. It's in between a buy and a sell. So if the news comes out good for the dollar, well, that will push the price, upwards. And if the news comes out bad for the dollar, it means price will come and retest the previous support. Then maybe later on it can reverse. So if the news comes out good for the dollar, we buy. And if it comes out bad for the dollar, then we'll look at an opportunity to sell. But the truth is that the bullish movement is going to be much more longer term compared to the bearish movement. So we can look forward to that being that it's longer term compared to the bearish movement. So if we have a green, then that will be our best scenario to take a buy on the dollar. And that is also what I'm seeing on the USD card. For the USD card, we also have a similar scenario to what we have on the USD CHF. This is the USD card on the weekly time frame. We can see clearly that price is on an uptrend on the weekly time frame. We have an uptrend line there, and we have a support level and the rejection candle that closed last week. So technically, we're looking for an opportunity to buy on the USD card. That's what we can see from the weekly time frame. So if the news comes out good for the dollar, just like we said on the USD CHF, we can buy. And if it turns out bad for the dollar, I think we should just hold on. It may retrace, it will be a retracement, but it's be a short-term one. So let the focus be on the longer term, which should be the bullish movement on the dollar. Please let's mute our devices. Somebody's mic is on. So I look more towards buying than selling. That's all I'm saying. I'm not saying it won't sell. If it becomes out less than, it will sell. But the bigger picture is what we should focus on, which is the bullish movement. Because for USD card, this is trying to form, from what I can see here on the weekly time frame, it's trying to form a double bottom, which will lead to, a bigger move. So that's why the focus should be on the buying of the dollar, and that will be if the actual comes out greater than forecast, for all the events we have this afternoon. So that's just my major view of the market this afternoon. We're looking at USD CHF and USD CAD. Now for GBP USD, we may see reaction if the news comes out good for the dollar, because I already have a downtrend, set up on the GBP USD. I've been watching this setup since around Friday last week thereabouts, and this setup came up as a result of a descending trend line for the monthly time frame with a corresponding resistance on the weekly. So technically I'm looking for an opportunity to sell. So if the news comes out good for the dollar and we're buying the USD CHF, it may also be an opportunity to sell the GBP USD, because I expect a further decline, on this instrument. All right, so that's all. Can you still see my screen? Can you see my MetaTrader platform?
Yes, we can.
Yes,
We can see.
very well.
Yes.
Okay, I think I
Yes, sir.
pressed
Not
on.
very clear. Yes, sir.
We Did you say not very clear? Well, you can see it very well.
Not very clear. Yes, sir.
Okay, is there another person not seeing it clearly?
It's showing half.
It's showing
Yeah,
half.
it's showing
Okay.
half part. Yes,
Okay,
sir.
I clicked something unknowingly. That's why I'm asking. So I can't even see it on my own screen. I'm trying to load it again if that will correct it. Okay.
Thanks, sir.
Is it better now?
No, it hasn't changed. It hasn't changed.
But we are seeing it. We are
Yeah,
seeing
it. Okay, let's just manage it.
Yes, I think it.
Okay. Okay, so you can see I have GBP USD on the screen now. You can still see that.
It has closed up. Oh. We are not seeing it, sir.
Okay.
Yeah, we are just seeing PU prime.
I just seeing PU prime. Okay.
Yes, sir.
How about now?
Not yet, sir.
It's coming up.
It's coming up. It's loading. It's showing. It's showing now.
Good now. Good now. Good.
It's good now.
It's showing now.
All right. All right. Thanks.
Yes.
Okay. So other pairs I'm personally paying attention to later on today. Now, all these other ones I want to mention now, they are more like a sync setup. I've mentioned the one for the news. We are looking at the USD CHF USD card for a buy and GBP USD for a sell. That's where the major attention is going to be on. Now, I have some other setup which I'm expecting to evolve later today, and one of them is the New Zealand JPY. Now, all these other setup are swing. That's what the market is giving. You know, if we follow the market where it's going, we don't dictate to the market what we want. Now, for New Zealand JPY, I mentioned at the beginning of the week that I'm expecting the bearish movement on this instrument because last week closed as a rejection candle on the resistance level. I hope you can see my New Zealand JPY. Can you see it? What I just circled now?
Yes, I can see it.
All right, all right. So we have a rejection, and the price, went ahead to retest that level. So technically, we are expecting a decline. So that's a weekly time frame. This is the daily, and now the daily yesterday, on the daily when we had the rejection candle on the weekly, it evolved into a bearish engulfing candlestick as on Monday morning, But yesterday we had some retracement where price retested that resistance level. So we're looking for the continuation now. And on the continuation, we're having a pattern that looks a lot like a shoulder, a head, a second shoulder, and we're expecting a breakout downwards. So we're not going to be trading this. This line here is actually expected to be the neckline, but it's not really in the middle as expected. So I'll just take that as a regular trend line and draw, I'll take that as a regular support zone and draw a trend line. So if price breaks this trend line downwards, it will be a time to trigger a sell on the New Zealand JPY. So we're just watching the course of today. Like I said, it's a swing setup. By check 2 p.m., 6 p.m. Anytime price breaks out below this trend line, you're free to take a sell on the New Zealand JPY. And currently RSI is at 50. So at that time, RSI should clearly have crossed, below 50, giving us a confirmation of a bearish breakout on New Zealand JPY. And I also have a setup I'm watching, which is the GBP card. Now, this one is going to be a very good trading setup, but I will advise it to only be traded after all the news has passed. The last set of news will come up by 3 p.m. So it's after all that, you might just be looking at giving a sell on the GBP card. But if you're going to be trading GBP card, please don't trade GBP USD so that you don't have, over trading. Now, how did I come about this setup? I mentioned this on Monday, and I can't remember if I mentioned, but it's one of the setup I've been watching, for a while. And you can clearly see that we have a rising wedge on GBP card, a rising wedge on the daily time frame. And that rising wedge on the daily coincides with a resistance on the monthly time frame. You can clearly see that we have a resistance level on the monthly time frame, which is exactly this place. And this one is actually close to it too. So we have a rising wedge on the daily, a resistance on the monthly, and the candle that closed yesterday closed as a rejection candle. which is at the confluence point between the monthly resistance and the trend line from the rising wedge. It's all from the confluence here, which is indicative of a breakout, downwards on GDP card. So if we zoom down to 4-hour time frame, we can draw another rising wedge pointing us to a bearish movement on this, on this setup. So we have another rising wedge pointing us to a bearish direction. And the current candle on 4-hour just broke that setup. Now we need to wait. The next 4-hour candle will come up by 2 p.m. So if the next candle by 2 p.m. comes out and this current candle is still below the trend line, then, like I said, we need to respect the fact that there's a news by 3 p.m. So we'll wait for that 3 p.m. news. After the effect of the 3 p.m. news, maybe around 4 p.m., we can go ahead to trigger a sell on GBP card. That's provided this candle remains this way below the trend line, by the next candle. It's very, very important. It's below that, trend line. If it's below the trend line, then by after all the news has passed around 4 p.m., then we can go ahead and trigger a sell on the GBP card. RSI is currently below 50, is at 42, indicating that, the market is really getting set to take a sell on GBP card. All right, so that'll be all from analysis this afternoon. I'm bullish on the USD CHF. I'm bullish on the USD card. I'm bearish on GBP USD for the news, and for other technical setup, I'm bearish on GBP card, and I'm bearish on New Zealand JPY. All right, that'll be all from my end. I'll take a few questions and we can close for the day. So Mr. Victor Bole is asking me to check Euro JPY. Now, all the JPY pairs are doing the same thing, though I will advise you don't just dump Euro JPY into a sell, wait for a clear breakout. Just like I showed you what will happen to the New Zealand JPY, you need to patiently wait for a breakout for the Euro JPY also. Now, for the Euro JPY, let's do the analysis too. Right from the weekly time frame, we can clearly see that there was a rejection candle, last Friday, which is this red candle at a resistance level. All right, and on 4-hour, we can see that we're also having a head and shoulder forming, which will lead to a bearish breakout. This is the neckline. Now, if you want to take the approach of the New Zealand JPY, you can, but with a little caution, because if price breaks out below this region, the neckline is very close. So I will advise you rather wait, let price break through. Let's remove that trend line. Let price clearly break through below the neckline before you trigger a sell on New Zealand JPY. Now, don't say, but it's already facing down. Let me enter a sell now. Please follow the pattern the way it is to be traded. Don't just assume that, okay, it's facing down. Let me just enter downwards. Well, things do change. You may see a retracement before all that, and you may get scared. So wait for price to break below this neckline, then you can trigger a sell on the New Zealand JPY. And don't forget, it's a swing, so it may take some time before all that evolves. Swing in the sense that it's a 4-hour setup. So that's it about New Zealand. About Euro JPY for the person asking. Williams OM rather is asking about New Zealand USD. Yes, I think I have a setup also on the New Zealand USD, but it's still evolving, and that's why I didn't mention it. Price is yet to break out, and my view on this one too, I have a very, very excellent setup on this. From the monthly time frame, we can see there's a descending trend line, and same thing on the weekly. You can see the trend line is descending. The trend line is descending, it's in a downtrend, and we have a resistance up there, which technically means we're looking for an opportunity to sell the New Zealand USD. And getting down to the 4-hour time frame, we have a rising wedge and price already dropped to a certain level. But then I'm expecting price to bounce a little before, dropping finally on this one. So this requires some patience also. But eventually, anytime price breaks out, either with the pattern I'm showing or just a direct breakout, if you have price breakout below the lower trend line, then it should be time to trigger a sell on New Zealand USD. Again, this is also a swing. That's what the market is giving us at this period. It's a swing setup. So trade it with caution and exercise patience. Swing trading requires patience. So if it's your thing, then you can look at trading it as a swing setup. But it's a bearish breakout we're expecting again on the New Zealand USD. All right, I think that'll be all this afternoon. Trade safe and happy independence once again. Bye-bye.
Thank you so much. God bless you, sir.
Amen, sir.
Happy independence.
Happy independence, man.
Have a great day.
Thank you very much, sir.
You're welcome, sir.